move on and invite Mayuresh Joshi, Head of Equity Research at William O'Neill, on the show now. Mayuresh, morning, and thank you for joining in. Do you expect a surprise this time in the telecom spectrum auction? What are you watching out for? And, you know, we've still not got that tariff hike. We were all anticipating it to come once the election is done. If it comes through, is it already priced in?
Morning, Rima. I think the data points that you put forth are very well laid out. The other angle is obviously the capex spend that you mentioned for the spectrum outlay that Bharti and Jio have put forth a couple of years back, and the infrastructure related to the same as well. So I think the entire 5G ecosystem capex and to a certain extent OPEX as well has been front-loaded by both these players quite substantially. And therefore, I think the expectations in terms of tariff hikes, which the street is probably looking out for, I think is largely penciled in as we talk about telecom stocks. But as this happens, it will be something which will be looked forward for the street in terms of whether more hikes are on the way as we enter into the next few quarters. Obviously, with hikes expected to come through, the kind of cash flow improvement that can come along on the balance sheets and to a certain extent deleveraging of balance sheets as well, specifically in Bharti's case, which again is a testimony that debt has been coming down over the past few quarters. And also what do they do in terms of a part of their African business is something to be seen. So you've seen a lot of consolidation happening in terms of the subscriber market share. You've seen a lot of consolidation happening in terms of the revenue market share as well. They've obviously weeded out the lower tariff plans as well. And Vodafone has to protect whatever circles it has got in terms of operations. So I think tariff hikes largely penciled in, but as they start coming through, they will lead to an improvement in balance sheet. So I think anybody holding on to an Airtel or a Reliance should continue.
Okay. Mayuresh, hi, good morning. Actually, we're going to be talking about Zomato in a bit, but I wanted your thoughts on that as well. There are reports suggesting that Zomato has now increased their market share further. Now it's almost at 57%. Which is a 200 basis points expansion versus the previous period. And of course, in quick commerce, it's been much more compared to competitors. But at this price, is the risk reward still favorable for investors in Zomato?
Morning, sorry. I think a large part of the move has happened in terms of anticipation, specifically in terms of its hyperpure and expectations of how the Blinkit business will come onto the profitability path in the next 2 to 3 quarters as the management has put forward. So to a large extent, I think it is penciling in a large part of the expectations in terms of the overall business segment's contribution improving quite significantly. But on the other hand, if you probably look at valuations which are happening in the entire space itself, the kind of raise that Zomato has done in its Series F funding at a few days or a few weeks back, I think that's been a substantial increase in the valuation matrix that one probably sees. I was going through some reports as well, which probably indicates that this is going to be the fastest growing segment, both the hyperpure segment as well as the quick commerce segment for some quarters to come, specifically in areas outside tier 1 cities. So I think you're seeing an increasing trend happening on that count as well. So yes, I think if the management has been speaking its talk as far as Zomato is concerned, specifically on its Blinkit and hyperpure business, will create strong balance sheet dynamics. Other competitors' valuations will also start posing as some element of valuations, which can also be seen at a higher side as far as that entire space is concerned. So I think the price move is probably there. Anybody who's got into the stock at lower levels may continue holding because the numbers, as they keep on changing dynamically on the other legs of their businesses, will lead to better balance sheet improvement. So yeah, anybody holding the stock can.
Mayuresh is still with us on the show. Mayuresh, wanted to get your thoughts in on Amara Raja. The company signed a comprehensive lithium-ion agreement with a Chinese-based company. How much of an impact do you see this having on Amara Raja? Because I think the stock also trades at a discount to Exide.
Oh, yes, it absolutely does. And to a large extent, if you probably look at the battery makers, it's largely a oligopolistic market. So I think Exide and Amara Raja have a large part of market share as far as batteries are concerned. And when we're talking about internal combustion engines, I think that will still continue, at least for the next few years. As the transition happens in terms of electrical mobility and electrical mobility platforms as well, the kind of capex that both these players have done over the last few months and expectations of this capex fructifying in terms of capacities coming on board, 6 gigawatt hours each, if I'm not mistaken, and a substantial increase after that as well in the next few quarters will mean that they will be sufficiently having utilization levels to probably service the EV market as well. Let's not forget the replacement market is doing reasonably well for both these players as pricing probably remains in their favor. And again, the 30% component in terms of their top line, as far as industrials are concerned, should remain on a steady state basis as far as top line and EBITDA is concerned. So yes, I think Amara Raja trades at a discount, but I think both these players are sufficiently well poised in terms of business dynamics to drive their earnings going forward. So I think we've been very, very optimistic on both the vectors.